Hello everyone, welcome back to my YouTube channel. In our previous video we looked at the cash book, but we are not able to complete it, so this is a part 2 of the cash book. In the previous video we look at the single column cash book, and I promised us that we are going to be looking at the double column cash book in this video. Please, if you know you have not subscribed to this YouTube channel, please kindly do so by clicking on the subscription button below. With that, you'll be among the first persons to receive notification whenever we drop a new video. So let's get started. Okay, the cash book. So the cash books, like I said, we have 3 or 4 types. We have the single column cash book, which we have treated in our previous video. We say it records cash or bank transaction. Cash or bank transaction. There is a single column. The column for amount on the debit side is only one column. The column for amount on the credit side is only one column. Then the double column cash book has a column for amount, 2 columns for amount on the debit side and 2 columns for amount on the credit side. The one on the debit side cash and bank, and on the debit side is the one for cash and bank. Then the 3 column cash book has 3 columns on the debit side and 3 columns on credit side also. So the one for the debit side has cash, bank and discounts, on the credit side has cash, bank and discounts. So it is the number of columns that determines whether you call a single column cash book, a double column cash book, or a 3 column cash book. Like I said in our earlier video, I said we are going to discuss cash book in a separate topic entirely. So let's look at this key item, key term, which is contra entries. The contra entries is where the transaction double entry begins and ends in the cash book. I mean, begins and ends in the cash book. That means the life cycle begins and ends in the cash book. As in, when you transfer money from your bank, from your cash book to the bank, is the contra entry. Because leaving the cash and going to the bank, and going to affect the cash book, affecting the cash column and the bank column. That is a contra entries. These are entries made in the cash book. So when cash is deposited into the bank, and also when cash is withdrawn out of the bank for office. Because when you withdraw money from the bank, you bring it to the office you're going to put it in the cash book. Then from the cash book you start spending bit by bit until you get it exhausted. So let's go ahead. So let's look at the specimen of the cash book, like we're going to treat it last. So you have the single column cash book, which we have treated before. So you have the column for date, description, folio, amount on the debit side, and also the same thing on the creditor side. This is what determines whether it's called a single column, the amount, column for amount. That is what determines whether it's called a single column or a double column cash book. So this one is a single column, a cash book. So look at the double column cash book. Double column cash book, you have date, description, folio, cash, bank. Date, description, folio. The same thing repeated on both sides. So what makes it a double column is this cash amount, then bank amount, which is double. Then this cash and bank amount makes it double. So let's also look at the one for the 3 column cash book. 3 column cash book has 3 columns for amount. Like we have cash here, we have bank, then you have the discount allowed. The same to have cash here, bank, and discount received. That's what makes it a 3 column cash book. So now we're going to be looking at this question. Said the 2 column cash book. The example: business started with 20,000 naira cash. Then January 2nd paid 4,000 naira into the bank. Then January 2nd paid rent cash 2,000 naira. Then 3rd again purchased by check 2,000 naira. Purchased by check is bank, because that is where you use a check, use it in the bank. Then January 10th sold goods worth 2,000 naira cash. Then January 31st cash sales 4,000, then check 3,000 naira. From the question, you see that it involves both cash and bank account. So this is definitely going to be 2 column or double column cash book. So require prepare a 2 column cash book for the month of January. Okay, let's quickly solve this one because you see how another one going to solve for today's video. So on January 1st, started business with 20,000 naira cash. As you know, usual money used to start a company, a business is called capital. So the owner of the company transferred, gave 20,000 cash to the company, so the company is receiving the cash. So let's open the cash book. So here's our cash book. Here we were prepared before, so it's date 1st January. This will be what capital. So we have a folio. Then is it cash or bank? From here we saw cash 20,000 naira. So we have to make 20,000 cash because it's a cash transaction. So we are done with that one. So go to the next day. January 2nd, paid 4,000 naira into the bank. Money paid into the bank. Money came from someone and it's going somewhere. So the money left the cash and it was paid into the bank. That means bank is receiving the money while cash is giving out. Let's solve it now. On the second, 2 of 1, who is giving out? Cash is giving out. So now let's show what cash here. What the bank is receiving? Bank is receiving 4,000 naira. So at the same time, bank cash give out 2 of 1. Job lot bank. Money went to bank, so we have here how much? 4,000. This what is called the contra entry. C. That's what is called the contra entry. So that's all for the contra entry. Put on the folio. Show that the contra entry. I mean the money left our cash, and it came to what? To bank. The two legs, the monetary principal, debit and credit, appear on the same account. That's the contra entry. Second, again, paid rent cash 2,000 naira. On the second, you paid rent, money is leaving, you are paying out. So we go to the credit side, paid rent. How much? Now I should go to rent. How much? I think it's 2,000 naira. 2,000 naira. So on the what again? January 3rd, purchase by check. You are buying by check. If you are buying by check, you are going to pay out of your cash book. Then say, no, you have to pay out of your cash book. Yes. But which is it, cash or bank? It's bank because here you have a check and use check for bank. So on the 3rd of January, the 3 of 1, we what happened? We made purchase of how much? We say through bank. How much was it? 2,000 naira. So appear under the bank column. So on the 10th, sold goods worth 2,000 naira. You sold goods. We said when you sold goods, you receive cash in return because here is stated categorically that it was made in cash. When you sold, you receive cash. On the 10th of January, to on the debit side, 10th of 1, what will be a sales narration? Which is on sales. They said cash, how much? 2,000. Was it 2,000? Yes, 2,000 naira cash. So the 20th paid salary. Paid salary, this amount they paid in check, which is bank. Their pay is going out. So it's going to go out of the cash book, which was on the 20th of 1. Narration was salary. What was it meant for? Salary, how much was that? 700. It came out from what? From the bank account. So on 31st, we have 2 sales there. We have cash sales and check. Receive check, receive cash. So the one for check will go to bank, the one for cash will go to our cash book. So 31st January, since that we sold, it's going to be check. 31st of 1. And share what? Sales. Sales how much? In cash is how much? So we have in cash is 4,000. Then check. On that check we have what? 3,000 naira. Okay, that is the end of the question we were given. Yes, that is the end. So now let's balance this account. So balance one for cash and cash column. Then balance the column for bank and bank. So let's start with the cash. Debit side of cash is how much? Let's cut 20,000 plus 2 plus 26,000 naira. Let's write it down somewhere. 26,000 naira. Then the credit side, have what? How much do you have here? You have 6,000 naira. 6,000 naira. Which one is greater? So this one is greater. So just enter it as 26,000 naira. 26,000 naira. Okay, so now that 26,000 here too. 26,000. So we continue. But if you look at it now, this place is just 6,000 naira. You have to balance it to make it up to the total of 26,000. So you have 31st of which day? 31st of January, 31st of first. We have what? Balance brought down, balance carried down. Carried down, we have much? 26,000 minus 6,000, we have 20,000. So you see, I have a balance of 20,000 in our cash book. So let's go to the bank column. So for the bank column, now we have 6,000, 7,000, and I have 2,700. So this side is great, debit side is greater. So enter it here 7,000. So see, enter it here 7,000. What will be the balance figure now? So we say 7,000 minus 27. That will give us 4,300. So our balance figure now is what? 4,300. That is all for what it has to prepare. Just what I want you to note here is the contra entry. The money left for cash, whereas I credited it 4,000 and it came back to bank, because now we use C to use C as a contra entry for it. So that is all for this column. So let's look at the second question. Okay, now let's quickly solve the second question. It's also we say prepare. You're required to prepare the cash book for the month of February 2024. You were not told whether it's a double column cash book or it's full column cash book, but going through the question, you understand that they make mention of a cash and back, so it's a double column cash book. So let's get started. I already have my cash book here, 2 column cash book. So let's start. The first one said February 1st, balance brought forward. That means the balance that was brought forward from the previous month. We have cash of 1,015 naira, then we have bank of 21,614 naira. These are both the debit balance. A normal cash book should have a debit balance, but there are situations where we can have a credit balance for our bank column, probably because we took an overdraft. So cash, we have cash of 1,050, then bank of 21,640. So you have a debit balance. You come here and put on the 1st of February, 1 of 1. We have what balance brought down. Now past tense, balance brought down. We have 1,050 and 1,050 for cash. Then bank, we have 21,640, 21,640. So supposing it were if we had a minus 1,050 or minus 2,1640, would have entered it on the credit side. That would have been a credit balance. But since they are positive, they're going to have on the debit side because normal cash book has a debit balance. On the 2nd of February, cash sales. We sold cash. You see cash. They will give out the goods. Cash is coming in. So the entry principle says debit the receiver, credit the giver. Now cash book receive it. So we go to our cash book on the 2nd of February. 2nd of February. Do what we have the sales. So the cash sales of about 6,015 naira. So we are done with that. On the February 3rd, took 500 out of cash till and paid to bank. We took from cash and paid to bank. That means cash gave out and bank received. So now let's go to credit side and show that 3 of the 2. Something left the cash. How much left the cash? 500. We paid it out. That's what bank is the receiver. So come here again and type enter here again. 3 of 2. Who will receive the money? Bank 500. Contra entry. Direction toward cash. Here again put a C to simplify contra entry, that the 2 transactions started and ended in the cash book. So on the 4th we say receive check from Ola. We received check from Ola. Probably we sold Ola credit before. Now Ola is paying us back. It's giving us through bank. So we are receiving money from him. So if you go to debit side because we are receiving it, the 4 of it too. That's Ola here. That's where I receiving the money from. 2,170. 2,170. So the next one says February 5th, paid cash 600 naira for stamp. We paid cash 600 naira for stamp. We paid cash is going out. So it's going out to the side. 5 of it. 2. What's it for stamp? How much was it? It's 600 and it's in cash. You go to another cash column 600. So on the 6th, we receive rate refund by check. We paid rate before for water, but now they refunded money back to us. It came in through bank. So February 6th, 6th of it too, we have a rate. Rate, how much was that? It came to bank 720. Because it came to bank 720. So the next one is bought goods for cash. Bought goods for cash. We paid cash. We received goods. So cash is giving out money. So we go out on the credit side in accordance with the double-entry principle. 8 of 2. Purchase. How much was that? Was it cash or what? Purchase 900 cash. So 900 on that. So the next one says withdraw 2,500 from bank. Office use. We withdrew from bank. Let's withdraw first from bank. February 10th. From bank, if you withdraw from bank, that means the money is leaving our bank account. January what? That will be January 10th. 10th of 2. 10th of 2. 10th of 2. So we do 5,000, 2,500 from bank. Where did the money go to? Say for office use, that means the money came back to the office. So the 10th of 2, how much came to the 2,500? So narration here will be what? Bank, showing that the money came from bank. Then here will be what? Cash, showing that the money went to cash. They have a contra entry because the transactions happened in the cash book. The next one here says paid wages cash. Money went out cash. So it's going out 20th of 2. Wages. How much was it? Wages was 2,030. 230. So I'm done with that one. The next one says receive loan from James. Money came in. Received from James. Check is going to our bank. That was what on the 22nd of February. Receiving it coming to the debit side. And so what's the name? 20 what? 22 of 2. What came out from James? Came from James. And it's a loan. How much was that? It's 800. 800 on a bank column because from here we'll see that it's under taken by check from James. So on 27, same bank cash. In cash, 18 naira we have. We took it from cash and into the bank. That number statement banked cash. So 27 banked cash. Banked cash. Yeah, 27th of February, 27 to we bank the cash 80. Cash. Where did it come from? It came from the cash column. So we have to remove this cash column. We cannot just come here and debit 89. It has to go out from the credit side. That's what? 27th of 2. Narration what? Bank. Came out from what? From cash. This is all we are asked to do. So now let's balance the account. So let's check what we have on the debit side of the cash book. We have 9,060 naira here, 9,600. Like I told you, add them up and write it outside first. Here we have 2,230, 2,330, 2,310. I mean, check again, 2,310. 2,310. Which one is higher? This one is higher, so we pick this one and put it under the box, inside the box. 9,600. Same here again. 9,600. So now let's get the difference. Let's add the balancing figure, which will be here. Balance carried down. So now let's get a calculator. and do the calculation. So we see 9600 minus 210, 9600 minus 2310. We are having a 7,290. So we have 7,290. So we are done with the cash column. Let's go for the bank column. Let's add up also. Here we have what? 25,910. 25,910. Then here we just have a 25. So definitely someone coming. 25,910. 25,910. Same thing on the credit side. 25,910. So the balance figure also come here. So subtract this from that. So now we have 25,910 minus 2,500. We have the balance figure of 23,410. 23,410. So this is all and all that you need to do. So you have to close this. Then you have a balance brought down. This shows the balance you have that we're going to use in next month. That's 7,290 23,410. So that is all. This was all we asked to prepare for cash book. So if you have any questions, you can ask. Okay, we have come to the end of today's video on the 2-column cash book. In our next video, we're going to be considering the 3-column cash book. If you have any questions to ask, you can drop it on the comment section. I want to appreciate everyone that has subscribed to this YouTube channel, and those that are yet to subscribe, you can do that by clicking on the subscription button below. See you in our next video. Have a nice day.